Dave Ramsey is probably one of the most well-known personal financial advisors. He has taught so many people how to budget and get out of debt, which has helped a lot of people change their lives. So his advice is great for a lot of people, but there are things that may not work for some people. Hi there, welcome back to my channel. If you are new here, my name is Lucy, and in today's video, I will be going over why I don't follow some of Dave Ramsey's financial tips. If you enjoyed this video and found any value, please give it a thumbs up. It really does help with the YouTube algorithm and supports our channel. And if you want to learn more about how to make better decisions with your money, be sure to subscribe to my channel. I do post videos every week about personal finance and investing. So now let's get right into it. So there are things I agree with him on, and there are other things I just do not agree with him on. And so I'll go over some of the things I agree with him on. First is getting out of bad debt. Not all debt, just bad debt. So this includes credit card debt, car payment debt, anything that pretty much takes money away from you. And good debt is anything that helps you build wealth and brings in cash flow. For example, a mortgage on real estate. This can potentially bring you monthly rental cash flow. Education may or may not be a good tip depending on how you're able to use your degree. If the degree is able to get you a high earning job and that payoff is better than how much you got in debt for, then it's worth it. Another good debt is business loan. Now, sometimes when you start a business, you need to have money to get started. And so getting a business loan, knowing that you will be able to make profit with your business, is considered good debt. You're using other people's money to generate wealth, or in this case, you're using the bank's money to generate wealth. I do agree with him on saving money to live below your means so that you can start growing your wealth. There's so many people that are living paycheck to paycheck because they don't know how to save money or because they're spending more than they have. And so that's why some people get into bad debt, because they resort to credit cards and different loans to make these purchases that they can't afford. And so I do believe living a little bit below your means so that you can save money, and that money can be either saved or invested in other means. I also agree with him on building an emergency fund. A lot of people are not prepared for an emergency, especially if you're living paycheck to paycheck. Something may happen where there's an accident or it prevents you from working and you lose your main source of income. Now, a lot of people are not prepared for an emergency because they don't have an emergency fund, end up resorting to getting into debt. And then it gets worse because they're not able to pay it off, and then it's just a cycle that goes on and on. So having an emergency fund is so vital to making sure that you're always prepared for the worst case scenario. Now, before I move into the things that I disagree with him on, be sure to like this video if you enjoyed it so far, and leave in the comments below on whether or not you have used some of Dave Ramsey's financial tips in your everyday lives. He has definitely helped a lot of people get out of debt and get into good financial habits. So leave it in the comments below if you learned anything from him. Now let's move on to things I disagree and dislike from his financial tips and advice. He believes that you should have a 0 credit score. Now, if you are a millionaire and you can pretty much pay for every single thing, then that's fine. You don't need a credit score. But if you're like the average American, then you'll probably need to get a mortgage or a car loan if you end up wanting to buy a house or getting a vehicle. And to get the best rates on mortgages to buy a house, you want to have a good credit score, because that will determine how much you will be paying for interest rates. And obviously having a lower interest rate will mean you're paying less on your mortgage. I think having a good balance in credit is very important. You don't need to have a bunch of debts to have a good credit score. You can have just enough to build that credit score, so that way if you in the future you do end up deciding to buy a home or applying for a business loan, you have a good credit score to get approved for that loan. I also disagree with him on having $1,000 in emergency fund. I think you need way more than $1,000 to survive, unless you really don't spend that much money and your rent and all your expenses add up to $1,000 every month. But even that, you want to save up at least 3 to 6 months of expenses. And so in this case, I don't think that $1,000 in emergency fund is enough. What happened in 2020 and unemployment just goes to show that you need to have an emergency fund ready to go, and it needs to be at least $1,000 to prepare you for the worst case that could happen if you lose a job or if an emergency happens. Something else I don't agree with him on is investing after you pay off your debt. Now, if you are tight on your budget and you can only pay off debt and you can't really save or invest, then that's fine. But if you have extra money at the end of the month after you pay off your debts, that money should go towards investing. And especially if you work at a company where you receive a 401k match, that's free money that you're leaving on the table if you are not investing in your retirement fund. I dislike his beliefs on credit card. He thinks that no one should have a credit card. Now, I disagree with this because I believe that having a credit card can help you open doors to building your credit and potentially using that to your advantage. What's really good about credit cards is that you can also earn cash back every time you use your credit card. For the most part, if you're disciplined and make your payments every single month, then having a credit card can only benefit you. I dislike the fact that he thinks all debt is bad. I think there are good debt and bad debt, and some debts that can only take money away from you, while other debts can help you leverage other people's money, grow and expand either business or your real estate portfolio. Small business owners do not have the actual cash just to start the business. The whole economy pretty much runs on debt. So if you can use that to your advantage, then you can build a bigger business and expand. Another good debt is real estate debt. If you're buying real estate that you know you can rent the property out for rental income or cash flow, then it's a good investment. Dave Ramsey also believes that you should pay your house with all cash, or make at least 15 to 20% down payment on the property if you need to take a mortgage. I disagree with this because I believe that your cash can be utilized in other ways. Now, if you're tying all your cash down in one property, then that money can go towards other investments. It gets rid of the most vital thing, which is leverage here. Let's say that you purchase a home that's $100,000. You put 5% down, that is $5,000 on the property. And let's say in 10 years, the property value doubles and now it's worth $200,000. This means that with your $5,000 investment, you get all that appreciation, which is $100,000 and any principal pay down you've made throughout the past 10 years. But now let's say that you listen to Dave Ramsey and you couldn't buy that $100,000 home because you don't actually have that money just yet. This means that you're 100K less wealthier in 10 years from now. So leverage is really the key in real estate. The more real estate that I can own that earns me cash flow every month, in 30 years, I will have everything paid off, which means a bunch of property that are fully cash flowing for me. And if I needed to sell a property to get a lump sum of cash, but if I decided to just buy properties with all cash, it will take me a long time to own a $100,000 house, let alone multiple $100,000 homes. Buying a property with all cash is not the best advice if you want to grow and expand your real estate portfolio. But Dave is a great person that has helped so many people get out of debt and start budgeting the right way. But his advice is really not for everyone. If you are happy with just living a simple life, then take his advice into consideration. But if you're interested in building generational wealth or using debt as leverage, obviously all debt is very risky, so that's something to consider when you do decide to use that. I hope you enjoyed this video. If you found any value, please give this video a thumbs up. It really helps with the YouTube algorithm and supports our channel. Please leave in the comment below if there's any advice from Dave that you don't agree with that I may have missed. And don't forget to subscribe to my channel. I do post videos every single week on personal finance and investing. If you're interested in purchasing your first real estate, check out these videos here.